Hi, this is Mark from Caliber Home Loans. We're just going to go over the market for the week ending September 11th. So let's go ahead and jump in and look at the market. So what we're looking at here is the bond chart from Friday. So it was pretty consistent during the course of the day, although you'll notice right at the open along the left, we saw this big drop in price. So this would put upward pressure on rates. So the reason for that, this is a perfect example of how the news that comes out is what actually comes out versus what's expected. So it was all inflationary information. So this stuff comes out about usually about 8:30, 9 o'clock, and then we'll drive the markets in the morning. So the data that came out was the inflation came out a little bit higher than what was expected. So again, remember, everything in markets, whether it's stocks or bonds, is based on expectations. So when inflation comes up higher than expected, bondholders will typically want to raise the yield on their holdings to hedge against future inflation. So remember, when people buy bonds, they buy bonds for two reasons. One, they actually buy and sell and trade bonds based on the price. And then they also buy and hold bonds for the yield. So if you're buying a bond that yields a certain amount and all of a sudden you think that inflation is going to go up in the future, that erodes your yield. So your money is worth less in the future. So you're going to want to raise the yield of that bond in the marketplace. So that's exactly what happened. So the price dropped. Remember, the price and the rate is an inverse relationship. So the price dropped when the inflation data came out, and it pushed yields up a little bit. So this is a perfect example of what happens in the market. So let's take a look at the past week. Again, you'll see this big drop from Friday morning, and then there's another drop in here. There's some information that came out for unemployment numbers and some other types of inflationary information that was a little bit worse than expected. So again, you're seeing this trend. But overall, if we look at the price started out at 5.234 and ended up at 5.078. So it did push rates up a little bit during the course of the week, but it's still not a huge difference, because once again, the Fed is buying just millions and millions of dollars worth of bonds every day. And that keeps things pretty steady. So let's go ahead and look at the last month. You'll see that actually up until about September 1st, the trend was bond yields were trending up. Bond prices were trending up, which would push rates down, and then it started to reverse itself. And then since March, again, you can see there is a slight, the trend is still in pricing, the trend is still upward. So the overall trend is still to push interest rates down a little bit, but again, as you can see, it really varies from week to week and from day to day. So again, rates are super low. We're still in the under 3% range for purchases with great credit, 20-25% down. And actually, little known fact is if you put less than 20% down, your rate may actually get a little bit better than if you put 20% down. That's because the presence of mortgage insurance in a conventional loan will reduce the risk of the loan to the lender and to Fannie and Freddie. So that allows pricing to get a little bit better. So just a tip. So other than that, Caliber has reduced our minimum credit scores for FHA back down to 580, which is good news. I think we're at 620 on a VA loan, and for a rural development, we're at 620. But I know with the FHAs, there's been a lot of clients that we raised them to 620, and there's been a lot of clients that are just under that 620. So we can circle back with them and see if they qualify now. Other than that, the housing market's on fire. It's still on fire, and we don't really expect that to change anytime soon. CoreLogic actually just updated their latest findings, and before they were pretty bearish on what they thought was going to happen with housing prices, and now they've reversed that, and they, at least for the most of the country, in the Midwest especially, they expect housing prices to continue to rise. So that's good news, and the rates being as low as they are is continuing to have a good effect on housing affordability. So even though prices are going up, people can still afford to buy a house because rates are super low. So give me a shout. Let me know if there's anything I can help you with. 248-705-8431. And have a great weekend.